Hi everyone, let's look at this question. There's a monthly income of 3.5k for a HDB flat. The cost of the property is 180k. This is his first housing loan. Okay, so he's looking for a bank loan, and he has a monthly car loan repayment at 1k every month. Take note, it's every month. Okay, the question asks what type of loan he can get from the bank. The answer is quite obvious here. The housing loan, housing loan enables John to get, to complete his purchase of the flat. Next, we calculate the minimum down payment for the first property loan with no other outstanding housing loan. That means this is the very first one, and currently there's no other housing loan. Okay, this is the very first. So when you find cash and or CPF. So the minimum amount of down payment with no outstanding housing loan. Okay, we take note that cost of property is 180k. So the first 5% down payment in cash, purely cash, is 5% times the cost of property. Substitute the figures in and get the answer. Next, we look at the next 20% down payment in cash and or CPF. So this is a different category. Okay, cash and or CPF. Okay, basically means you can pay in cash or CPF or combination of cash and CPF. So it's 20% times cost of property. Substitute the figures in. Get the answer. Next, John wants to know the maximum monthly payment he can use, to service housing loan on a monthly basis. So there's this thing called TDSR, is total debt servicing ratio of a threshold of 60%. So in short, you call it TDSR. So now we're going to find what's the maximum limit for monthly housing loan repayment. Okay, this is based on the person's monthly income. So he can take out certain amount, out based on his monthly income. This certain amount is used for the CPF. He must meet this criteria in order to qualify for the housing loan. Then basically, or rather, this is the maximum amount of money he can use to service his housing loan. So 60% times monthly income minus other monthly loan repayment. If there's any other outstanding liability, he need to take the bank will take that into consideration. Other monthly loan repayment. So substitute figures in. We know the monthly income is 3.5k, and he has a monthly car loan repayment, of 1k. Substitute the figures in, and we get the answer. Next, we're looking into renovating his flat. So he's worried that he may not get an unsecured loan of 25k because this renovation loan is an unsecured loan in this area. So calculate based on what's the maximum limit of unsecured renovation loan you can get. If it's maximum it's not sufficient, how much you need to top up cash. So we look at the maximum limit of unsecured renovation loan. So here is 6 times the monthly income. Say 6 times the monthly income. We know the monthly income is 3.5k. You substitute the figures in, and we get an answer here. Take note that this unsecured renovation loan, they usually have a maximum limit. Here in this case, the common practice is about 30,000. Maximum common practice is about 30,000. So we take 30,000 as the maximum amount. So we need to find out how much you need to top up with cash. We know the required amount, he need require 25k, but he can borrow maximum of 21k, okay, or rather the maximum housing loan limit. Okay, and we get answer here. 1 year later, John want to buy another property, a private property this time around. So he want to get a second housing loan. So first housing loan is for the HDB. The second housing loan is for private property. So it's on top is first outstanding housing loan. So you need to calculate the down payment for his second property with one outstanding housing loan. So it's same thing in two category: cash. First category is cash, purely cash. Second category is cash and or CPF. The minimum amount of down payment with one outstanding housing loan. So we know the cost of property is 700,000. So the first 25% down payment in cash, purely cash, is 25% times cost of property. So it's 25% times the cost of property. Substitute the figures in, and you get the answer. Next, we look at the next 30% down payment in cash and or CPF. 30% times cost of property. Substitute the figures in, and you get the answer. For question part E, discuss the similarities and differences with respect to personal loan, revolving credit, overdraft, and credit card by filling up the following table. So there are 1, 2, 3, 4, 4 different types of loans or facilities here. Okay, facilities here. So we're looking at them, comparing the similarities and differences. Let's look at the first row, minimum income. So we see for personal loan, credit, and overdraft, they have a minimum of 20k. Whereas for personal loan, there's an exception for renovation loan. It requires 24k per annum. Okay. Next, we look at also highlight difference that the credit card has a 30,000 30,000 per annum limits. It's much higher than the other three. All right. So this is the requirement is more stringent here for credit card. Next, we look at the personal loan. Okay, the repayment period and amount. Right, the personal loan is fixed repayment period and fixed installment. So it's like your housing loan, you pay every month more or less the same amount. Okay, the period is fixed and repayment will be the same, provided there's no change in the interest rate payment or this. All right. Okay. Next, we look at revolving credit. There's a minimum payment of amount of a certain percentage of total outstanding, because it depends how much you owe the bank. Okay, so when the credit line is restored once the payment is made, it basically means that whenever you let's say I use 5,000 revolving credit, then tomorrow I pay back the 5,000. So when I pay back the 5,000, I can be, the limit has been set, so called, by this 5,000 amount. Okay, so the credit line is restored. Next, we look at overdraft. So we pay any amount anytime. Can we use the amount we pay as long as the balance stay within the limit? For example, let's say you have the bank approved $10,000. Okay, $10,000 overdraft. So as long as keep within this $10,000, yeah, the bank will. I mean, you can repay as and when you want, right? Of course, take note, there's interest expenses you incur. Okay, wherever you owe or you use, I mean, you owe the bank, right? Next, we move on to credit card. Credit card, there's a minimum payment of a certain percentage of total balance. So this is either a percentage or as a minimum of 50K, $50 or something like that. It depends on which credit card is thing. So there's something, but general rule is that there's a minimum payment of certain percentage of the total outstanding, because credit card this month could spend more than the previous month. Yeah, so it depends on how much. Next, we look at interest expense. All right, for the personal loan, like housing loan, the interest expense is more or less fixed. Okay, for the revolving credit, okay, the interest is payable upon how much you use. Same thing for overdraft and credit card. Basically how much you use, because this revolving credit, overdraft, and credit card, it depends on the amount you owe, right? The amount you owe, right? The more you owe, of course, you need to pay more.